Hi, I'm John. Thanks for joining me. Today we're breaking down 3 headlines shaping markets right now. An Indian IPO wave that could top $5 billion, deep cost cutting at Renault, and why software stocks like Figma are rallying after OpenAI's latest move. Let's get straight to it. First story, Indian IPO market poised for record $5 billion deals in October. Investor demand for offerings from Tata Capital and LG Electronics India is already oversubscribed, and analysts expect as many as 15 additional listings before month-end. If all price at the top of their ranges, October would set a new monthly fundraising record for India. Why does this matter? A vibrant primary market signals confidence in India's growth trajectory, just as the IMF projects the country will contribute the largest share to global GDP expansion next year. Robust IPO appetite also gives foreign investors an entry point into sectors, from consumer finance to semiconductors, previously dominated by family ownership. The near-term impact is upward pressure on domestic liquidity and potentially some rotation out of secondary equities as institutions free up cash. Looking ahead, watch pricing discipline. If the pipeline clears smoothly, we could see a virtuous cycle of capital formation. But frothy valuations may invite regulatory attention from SEBI, which has already hinted at tightening disclosure norms. Let's move to our second story. Renault considering cutting up to 3,000 jobs. According to French outlet L'Informe, the automaker is reviewing plans to simplify operations and trim fixed costs amid what management calls an extremely competitive environment. The potential cuts would focus on back-office and engineering roles across France and Spain. Why it matters? The announcement underscores how legacy carmakers are grappling with the capital intensity of electric vehicle transitions while facing weakening demand in Europe. Renault's shares have underperformed the stock's 600 auto and parts index this year. Management is under pressure to boost margins ahead of 2026 product launches. Job reductions, if confirmed, could save an estimated €300 million annually, roughly 60 basis points of operating margin. Possible consequences? Labor unions in France wield significant influence, and political pushback is likely as the country moves into budget negotiations. Any delay or dilution of the plan could affect Renault's ability to fund its Ampere EV spin-off, slated for next year. Investors should monitor forthcoming third-quarter deliveries and the October 26th strategy update. On to our third story. Figma and select software names jump after OpenAI showed that AI might not eat software after all. OpenAI's new GPT Apps feature allows users to pull in third-party tools like Figma, Spotify, and Slack directly within ChatGPT. Markets interpreted the integration as complementary rather than cannibalistic, sending Figma's secondary market valuation up 7% and lifting Atlassian and Adobe by 3% apiece. Why it matters? Ever since generative AI burst onto the scene, investors feared traditional SaaS models would be disrupted. This week's rollout suggests a partnership pathway where AI platforms become distribution channels instead of direct competitors. For revenue-generating startups planning exits, that narrative shift could reopen the tech IPO window that has been largely shut since 2022. Looking forward, keep an eye on usage metrics. If embedding yields higher engagement for both OpenAI and partner apps, expect a wave of integration agreements, potentially boosting multiples for workflow-oriented software companies. To wrap up, India's record IPO pipeline highlights global appetite for growth stories. Renault's contemplated job cuts remind us how brutally the EV shift is reshaping legacy balance sheets, and the rebound in design and collaboration software shows that AI's impact on incumbents is still being written. Over the next week, watch Indian IPO pricing, Renault's labor negotiations, and any additional names joining OpenAI's partner roster. Drop your thoughts in the comments, and if you enjoyed the video, give it a thumbs up. Don't forget to subscribe and hit the bell icon. Thanks for watching. See you next time. This is not financial advice.